Good morning, it's Harvey Jackson. Just going to go through a few topics here. Biofuel is in a little bit of chaos. There's some information that's coming through the news wires now. What is fact, what's going to happen are two different things, of course. But first, I'm just going to get through. We've got a couple upcoming meetings. One at Steenan at the Rawhides, and then another meeting the following day at Moosomin. So that is the 26th and then the 27th next week. I will put some links in if you guys wanted to attend that you can click on and just let me know. I do have it sent out to a number of clients and prospects in the area as well. So Trump administration may delay biofuel import credits as refiners balk. President Trump administration is considering delaying proposed cuts in incentives for imported biofuels, so that would include canola, by 1 to 2 years, a move that would please the U.S. refiners but upset the farm lobby. Environmental Protection Agency initially planned to reduce the value of the renewable fuel credits by half, and however, the EPA is now weighing a delay in the 27-28 amid concerns of limiting credits for foreign supply could raise costs and tighten fuel supplies. The EPA is reviewing public comments and have not made a final decision. So, and again, this is up in the air. The White House has not commented. The delay of several regulatory moves being closely watched by the fuel industry, including finalizing 2026 biofuel blending mandates and deciding on year-round sales of gasoline blended at 15% ethanol. The ongoing U.S. government shutdown and efforts to resolve the small refiner exemption requests have been contributed to delays of biofuel regulatory decisions. Scott Irwin basically just he posted here as well on X, and the potential is very significant development in biofuel space, delaying the 1/2 RIN implementation for a year or two could be a major setback for domestic feedstock suppliers, and I expect any more like this would be opposed vigorously by ag. So first point, and then he does get into different RIN proposals if implemented, in this state here, what that would look like. So it's way up in the air, and it's going to be difficult to navigate until something gets said by the government. S&P sees U.S. farmers planting less corn, more soy in 2026. This is highly expected, just for the fact of rotation. They did put some numbers here. They said corn plantings would be reduced by 3.8%, and soybeans would move up by 4%. So you're going to see a shift, and a lot of that is just rotation. But the lopsided heavy corn, lighter soybeans could have an implication. But the implication, I would say, if this were to happen, is the overall oilseed shift on the planet right now. It seems like there's not going to be less oilseeds planted, but more, and that is something to watch out for pricing going forward if everybody were able to get a good crop. Just a quick look here. Looks like we're definitely going to get seeded into some cold in Saskatchewan, Alberta, Manitoba for sure. Here's your weather anomalies. It looks like they're going to get some wetness down there. Finally, maybe break some of that drought in the southern states there. But this is snow, as you can see here. You get a buildup of snow in here, of course. Just a different look with a different weather service. The other one was European. This one is the GFS. Here's your GFS weather anomaly. Does look like it could be starting to dry out a little bit going forward the whole month here. Here's your global look of moisture that's going to get moved, and this is all the way out to December 4th. So you can see that there is significant moisture in the U.S., or lack of, I should say. Oh no, it's actually precipitation of, and it looks like a lot of the Brazilian areas are going to have moisture, but maybe Argentina could be without. Let's just quick look at the markets here. Canola up 230. It started off a little bit red on the overnight trade. Rapeseed is up 450. Soybean oil is basically flat at 51 cents, down a full cent yesterday. Crude oil up half a buck, just shy of the $60 a barrel. Soybeans 10.36 and 3/4, so flat there as well. Spring wheat is up a penny, and your hardwood winter and your Chicago wheat is up 4.5. Milling wheat is up half a dollar per metric ton, and the Canadian dollar is a little bit under pressure. So you can see here the 200-day moving average seems to be creating a wedge going forward on the January contract. It's not, or resistance, and it seems to be getting pulled back from there. Same thing with the, or not the same thing, but the November futures just basically going sideways for all the way since September, really, if you look at it there. Rapeseed, it looks like it's up, going up in this upward channel. And making new highs. The price differential is $137 for the European rapeseed and Canadian canola. So you're $137 more expensive in Europe than you are in canola. And if we saw the peaks last year, we got to $200, and that's when we found export market. So you can say that there's, let's just call it $60, $70 a differential here. Soybean oil. 2 days ago, had a nice leg up, and yesterday we pulled back down, so a whole penny down. Soybean futures had the similar kind of move, significant pull down. Looks slightly green as we speak here right now, and the crude palm oil is actually trading kind of sideways there as well, and the crude oil is still in that downward trend. So if you look at the Canadian dollar, I'm starting to revise where we want to maybe wash out our deficits on the trading account. If we get to 72 cents, because this trend definitely seems like it's still got downward pressure, especially when you see the U.S. dollar index now peaking its head above the $100 index. That is putting pressure on U.S. traded commodities. So that, even though you might have some up days in there, that's still putting pressure on it. And you can see that the VIX has actually had a pretty good run up as well, just lately as well. Well, the VIX is actually a volatility index. So spring wheat, still nice trend going up here. Hope that can continue. I'd like to see this get into that $6-ish mark at this point, which doesn't seem all that far now that we're in 580 something, right? So Kansas more sideways than the Minneapolis. Minneapolis seems to be trading on its own. And you got your Chicago there too, same thing. Your and then your French wheat, corn. Looks like it's kind of had some big trading days earlier on this week, and now it's pulled back a little bit. So we'll see if it can withstand some of this pressure that it's seeing. Oat futures still seem to be on the way up, but it has to beat that previous high there, just over the 310 kind of mark. Quick look at the meat or the live cattle, starting to just kind of chop away sideways with some wide and erratic trading days. Same thing with your feeder cattle. It's been quite erratic. And your lean hog futures, it's been erratic there as well, and we'll see if it can actually break out of this trend and get some upward movement. That's all I have for you today.